Welcome to Morningstar. In the past quarter, e-commerce platform C Limited achieved its second ever profitable quarter in history, while ride-hailing app Grab beat earnings. But investors are worried about whether these companies' growth are sustainable. Are these concerns justified? We are asking Kai Wang, Senior Equity Analyst with us at Morningstar. Hi, Kai. Both C and Grab posted solid earnings. What does this mean for your future outlook for these companies?
Yeah, they posted solid earnings because they increased the monetization rate for both platforms. But what this also means right now is that GMV growth is slowing down and then competition is intensifying in Southeast Asia. Consumers are either choosing other platforms that provide subsidies and coupons, or altogether just not using the platform because they are likely very cost sensitive here.
So the market is reacting quite negatively against the positive results. Why is that?
Yeah, so it's justified. So basically, C saw a drastic decline in GMV for its e-commerce business despite positive results. What that really means is that they're not really growing, and they're just really kind of just increasing their monetization rate and cutting down on their sales and marketing expenses. So there are questions of whether or not they can actually reach both profitability and growth at the same time. Grab missed some growth estimates from a consensus, despite the fact that they're still seeing robust GMV growth in 2023. So they recovered some recent losses recently, so it wasn't as bad as C, in my opinion.
So the bigger question with C and Grab and other internet companies in ASEAN is that how can they achieve both profitability and growth at the same time?
I think it's going to be very challenging. It appears a lot of these platforms are unable to achieve both profitability and growth at the same time. Growth even declined for e-commerce as the platforms focus on monetization earlier. GoTo has already implied that second quarter GMV e-commerce growth will remain challenged. So it doesn't really bode well for other e-commerce platforms. For Grab, despite not meeting consensus expectations for growth, they still saw robust growth for first quarter, and we do expect some continuation of this growth in the second quarter. And also didn't have to cut its sales and marketing expenses, so they're in a less dire position to reach profitability here.
Right. So Grab is the only undervalued stock of the three. Is it a stock that you like the most for the long term, and how should investors pick winners in the ASEAN internet space?
So I think Grab has the best prospect of return to growth given its market share in ride sharing. It has a very dominant market position there, and so that dominant position provides us a kind of a high valuation for Grab if everything else falters. In terms of picking these other stocks, I think you have to take a look at not only the profitability, but the ability to return to growth in the future.
Right. Thank you so much, Kai. For Morningstar, I'm Caitlin.